Do you think this stays a very micro story and therefore it could be a manageable non-event, or do you see actually bigger macro implications for markets?
I think in terms of the Evergrande event, the implication will be even bigger than what we think at the first, because what now we can see is that basically there's a crackdown in the single B bond market offshore. So most of the developers now basically losing the refinancing capability in offshore. Even like you can see from the quite reputable regional leaders, they are unable to do the refinance for the US dollar bond at high single digit. So the problem is the investors, creditors are losing confidence in the sector nowadays. So that's why we can see from some latest like land auctions and the land market in some second tier cities, lots of land didn't get any biddings. So the first implication, of course, those private developers, they are losing their market shares. Like let's say now they can get the land, they can get the refinancing, so they stop bidding for land.
So Philip, is there any way? Is it gone too far now to dial this back?
I think it's at the moment we cannot know what the end game now, because there's like whole the sector is entering a deadlock now, and because for the leaders they're fine, yeah, they still get cheap money, and I think the shares are down a lot and pricing a lot of bankruptcy risks across the sector, but of course that's not the reality. Yeah, I think the market is pricing everything is going to bankrupt, and then everyone has liquidity problem, but that's not the truth. But of course, when no one knows what's going on in the fourth quarter, no one knows when the government is going to step in to solve the case. If they will, and then no one knows. So everyone was just priced in the maximum loss in the worst case now. Yeah, that's the key.
Which I think is a good thing, right, Philip? If you're prepared for the worst, right, everything just sort of, you always surprise yourself to the upside. I'm sure you heard the conversation we were having with Steve there, the UBS, outlining the three scenarios. One of those scenarios is with the Evergrande now offering essentially some of their properties at a discounted rate. Do you think we're underestimating how this might spill over into the broader housing market with, cheaper and cheaper units, for example, and how this might affect other developers on top of China looking to cool prices anyway?
Yeah. Now, of course, the Evergrande strategy is just trying to cut the price and then to outweigh the other developers to try to get more cash on hand. But the key is now they are more, because the buyers are losing confidence on them, whether they can complete the properties, and then no one will pay their money later on. Or if I'm the buyers, I would just simply wait for next month to see if it will be cheaper. So some other developer will start to auto facing the same problem, because they can see even Evergrande, they will get such a great big credit crunch, and then they may not able to complete the properties. They will also try to see if any others would have facing the same problem, because the buyers are not foolish. They can just simply wait for the whole thing. Maybe they can wait for few months time to buy their properties if they want. And so they don't need to rush into the market to buy if the price is lower by 3-5% now. They just wait for the end of the year, or even the government see if they will step in to solve the problem.
So, I mean, Philip, the old saying about, the tide goes out and you find out who's naked, right? The thing is, Evergrande's naked. Is there anybody else who, do you think, as the tide goes further out, are going to be finding also have debts that they just cannot service?
I think for the other developers, and then we would be very concerned on the anyone who have more JV associates and then to cooperate together, because those debt off balance sheet debts are more likely to hide inside this JCE and associates level. So people are more concerned on these players with a lot of MIs, a lot of JCE projects. Yeah.
We've seen just overall when it comes to the data in China, August was pretty ugly. People are saying maybe September could be pretty bad as well. Is the macro picture enough, do you think, for any kind of policy tweaks right now from the government, or should we expect property as well as credit to remain tight?
I would expect at least from the angle of the liquidity or from policy, they will stay tight for at least 2 or 3 months. And until they will see the FAI, those macro figures, really hit on the nationwide economic growth, like GDP, like the nationwide FAI. I think the more likely the timing of the government to loosen the policy would be by the end of this year.
Philip, let's end this on a bright spot. Your three favorite property stocks, three companies that might, all of the challenges we outlined there, that might see this through in a very big way.
If I would pick any property stocks nowadays, I'll definitely the leaders and SOEs, and then if from that angle, from that angle, like CR Land, Long 4, and I think maybe Shimao, they will go through this bumpy road. Yeah.